Welcome to Share Talk, the only podcast where investors come first.
We are joined on Share Talk today by Andrew Bell, Regency PLC Chairman. Good morning, Andrew. How are you doing?
Good morning.
You had a RNS out yesterday, JV with Legacy Hill Resources and Loan Agreement. Is it possible we can ask you some questions from shareholders today?
Sure, of course.
The first question I think is really important, looking at social media yesterday. Can you explain the terms of the loan and how that works, please?
Well, first of all, we can repay anytime in the first 6 months. If we don't do so, then in the second 6 months, there's a conversion option, but that conversion will be at 30% above the price at the end of 6 months.
Okay, there was a comment yesterday. Somebody made a comment about a death spiral.
Well, that just shows they were too lazy or too thick to read.
Yeah, because I read the RNS and I seen something different.
No, it is designed to make it impossible that it should be a death spiral.
No, that's great. Is the loan for the acquisition of a currently operating met mine? Second question.
Well, the loan is to fund the joint venture, and then the joint venture is looking for certain propositions that meet its criteria, and the lead partner in that joint venture, because they have the coal specialists already, is Legacy Hill. It would, of course, be natural that they're already looking at things.
Okay. How will the loan be repaid? Will it be from the coal mine operating revenue? Good questions these, aren't they?
They are, yes. I think the loan can be repaid, obviously, in a number of ways. First of all, we have substantial listed holdings. Secondly, if the price goes up, probably people will exercise warrants. And there's quite a number of those at higher prices. Thirdly, we have existing facilities, and once we can show that we have a business with a cash flow model, we can get a different kind of longer term finance, should we need it, from a different kind of finance provider. Also, I think those are the, obviously, fairly conventionally, I would say, either from people exercising warrants or in some other way, getting us new equity capital that way, or from loan capital on a longer term basis, based on the assets that we're getting. Or, as you say, we can get some cash flows out of any asset that we acquire and use that to pay off. We are actually looking at some Legacy Hill is looking at some possibilities that would have very significant cash flow potential.
That actually touches on to the next question. The next question was going to be, will Regency need finance any more to purchase the coal mine?
No.
Okay. Will Legacy Hill and Regency take regular management fees, cash dividends from the joint JV operation?
Well, if we did, there'd be no point, because we'd each be robbing the company for management fees. There will be a level of management fees taken by Legacy Hill, a small amount, just to cover Saradi's time, because he'll be devoting quite a bit of time to this and may spend some time over in the States. But otherwise, all the staff will be in the operating company of the joint venture and chargeable to that. And anything we do will be operating lean. So we will get our money back through distributions, and we've spoken of a distribution policy of paying out 50%, because both we and Legacy Hill have expenses, and that'll be the fair way to meet them.
Great. Will the coal mine provide Regency with enough working capital to cover ongoing PLC activities?
Well, the first step that will be taken by the joint venture will only be the first step. The aim of going into the metallurgical coal market, when we went in a year or two ago, first started looking at it, is to build something up. Because I think that if you don't have legacy costs, substantial underground operations, pension obligations carried forward, and low-grade coal operations, one can actually construct a coal company that would be very attractive and would be listable in the US and would have a good valuation. By looking at the situation anew and building something that is suitable for today's market. The problems that a number of coal companies historically have had in the US were sort of the problems of the legacy that they carried with them, including a large numbers of, for example, retirees.
These are all genuine shareholder questions, these, Andrew. They're very probing as well, may I add.
Yeah.
Will any coal mine operating profits be used to acquire any more coal projects?
I think that anything that we do as a joint venture will be to build out from initial operations. In other words, once you've got something operating, you can add ground because there's plenty of ground there. The difficulty is finding operators who will release the value of what's there. So if you're a landowner, you're quite happy to deal with one of them because then you'll get paid a per ton amount. So I don't think you necessarily need to go out and buy coal. What you need to do is buy access to coal, which can be you can buy something outright, or you can buy something with payments based on production. But obviously, in order to get something that can be listed, you want to bulk it up, and you bulk that up through production and through showing that you have the future reserves that you can produce from. So doing that in a cost-effective way is going to be important, but it's impossible to be very precise about how it will be done now.
The listeners should understand here, you don't know these questions, what I'm asking you.
I don't know.
Yeah, you don't. What is the ultimate plan for Met? Sell the company, public listing? ?
Public listing.
Nice answer. Does the coal mine have any required plant machinery and staff?
I think that the object of Legacy Hill and ourselves will be to find something where we can hit the ground running.
Yeah.
If you look at what Legacy Hill's core business is, they're going into things like, for example, steel operations, iron ore production operations, other things where there's existing plant, there's historic activity, and by going in there and running it very efficiently and bringing it back into operation, you can make money. I don't know if you saw the Sunday Times rich list a week or two ago, but this Englishman who has now become the richest man in England has done it by getting old industrial and chemical plants and running them properly, putting them together. And I think there's, in the mining field too, there's great scope for this sort of thing. But this is Legacy Hill's sweet spot. It's what they were set up to do, is actually to run things. And so when our priorities and their priorities are applied to the metallurgical coal sector, you can imagine the kind of things that we're looking for and the results that we expect to achieve.
All right, thank you. What's happening with Rosa project?
That has been, because of its relatively small scale, that has been something that we put aside to deal with a little later once we have done the main thing. I mean, I don't think, or we have made the judgment that we don't think that Rosa is running away anywhere in a hurry. It is good coal, but it has challenges running something relatively small like that and dedicating to it the management that would be required, because good management is scarce. But that's not to say that we've abandoned the struggle, though we do find that grade of coal attractive.
Okay, just two more questions you'll be glad to hear. Can you provide a brief update on Minbari, please?
Minbari.
Minbari, sorry, I apologise.
Look, I mean, we are in active dialogue with a number of parties on that. We've been talking to the government. We are talking to existing partners, and we are talking to potential partners. And I will be over there later this month. So it's a case of watch this space. We are very aware that the nickel price is breaking out, and of course cobalt is strong.
Yeah.
And we've been expecting that and been following it for several months and trying in anticipation of that to move things along there. And if we can get, and I think, we have held on to that asset through thick and through thin, through very bad times for nickel. And we did it in anticipation of the recovery that is taking place now, or I should say, beginning to take place. But the nickel price is breaking out. We are very optimistic about the prospects for nickel over the next several years. And we know that Minbari has a part to play in that. It'll need the right partners, and it'll need the right structure applied to exploiting it in order that a small company with limited capitalization like ours can get the maximum benefit from it. But we are really addressing that issue. And once we have put this coal venture properly to bed and got the first acquisition there, then I think a lot of the work for several months will be the day-to-day bedding in of taking over and running, which will be in the hands principally of Legacy Hill, and we will be really focused on the nickel.
All right, the final question. You recently announced a small investment in an energy storage company, Allied Energy. Can you provide any information about this investment, please?
It started off, we made a couple of initial investments or commitments, and we are looking at one or two other things. But what we envisage for that is that the future growth will be funded by external capital brought in specifically for that. So the next moves by Estech will be funded by new money that will be raised at Estech level by the board and management of Estech. And we hope, of course, that it will be a great success and will move very fast. We have a board meeting in a few days. Joseph Jairaj, who is one of the directors there, executive director, has had meetings in the last couple of days, which look very interesting and promising. And we just have to look at what we'll be able to do and what we're resourced to do. But we want to build that business up, yes, and we want it to be able to have its own listing. And that covers another aspect of the battery metal, nickel, cobalt space, and seems to us a natural add-on to the raw material position that we have with the exploration. Because one thing we do know about Minbari is it's not something that you can bring into production straight away. And we do have a model that requires us to be fairly liquid at times. So we need to have, on one hand, the capacity to hold on to our long-term assets long-term, and on the other hand, to generate income and generate profits and increase value, because that's the way that we're going to be able to avoid constantly tapping shareholders for money, which we don't want to do. And in another company that we've been involved in, Red Rock Resources, we have gone through that cycle, and having metals that have been rather ahead of nickel in the mineral cycle, we've now reached the stage where there are two or three fairly substantial and fairly reliable sources of cash flow and profit, which means that Red Rock will not be needing to return to the capital markets in any form. That's where we've got to get Regency too.
Andrew, you've answered all the shareholders' questions. We couldn't ask any more. And thank you very much for joining Share Talk today.
Thank you very much.
All right. Bye-bye.
Bye.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.